Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live from Channels HQ. I'm Ladi Williams. First off, let's take a look at what's happening with the markets. We see Brent and WTI extended losses today after plunging 5% in the previous session as investors priced in expectations for interest rate hikes in the US and Europe and wait for clarity on the future policy path. Brent futures dipped 12 cents to $75.20 a barrel, while US WTI crude, that fell 17 cents, about 0.2% to $71.49 a barrel. Both benchmarks closed at their lowest since March 24th in the previous session, when they also recorded their biggest one-day percentage declines since early January. The US Federal Reserve is expected to hike interest rates by an additional 25 basis points today to combat inflation, while the European Central Bank is also expected to raise rates at its regular policy meeting on Thursday. And in the grains market now, Chicago wheat slid for the third consecutive session today to its lowest in 25 months as recent rain in the U.S., winter wheat growing areas, and favorable weather in other northern hemisphere suppliers boosted expectations of abundant supplies. Corn, CV1, fell 0.6% to $5.76 for half a bushel, and soybeans, SV1, that gave up 0.5% to $14.03 for half a bushel. Favorable weather conditions across top suppliers, the United States and Russia and Europe, are driving hopes of ample supplies in the second half of 2023. Data published by the European Commission showed soft wheat exports from the European Union in the 2022-23 season that started in July had reached 25.67 million tons by April 30th, up 9% compared to 23.46 million a year earlier. And the president of the African Development Bank, Mr. Kiwumi Adesina, says the financial institution is building a $25 billion desert-to-power project in order to harness the power of the sun and provide electricity to about 250 million Africans. A statement from the Development Bank states that he made the announcement while speaking at the Carving University graduation ceremony in Michigan, United States of America. Mr. Adesina explained that the bank has so far connected about 20 million Africans with electricity. And to some company news now. One of Nigeria's leading financial institutions, Zenith Bank PLC, has declared growth in gross earnings of 24% from 765.5 billion naira in 2021 to 945.5 billion in 2022. Details of this and other results are contained in the group annual report and financial statements for 2022 presented to shareholders at the 32nd annual general meeting in Lagos, that's Nigeria's commercial capital. According to the founder, the chairman of Zenith Bank, Mr. Jim Ovia, the company was able to leverage inherent opportunities within the business environment to record a performance and further test its resilience as a brand. Take a listen.
A mixture of in-person and virtual attendees at the 32nd Annual General Meeting of Zenith Bank.
We have the pleasure of calling this meeting to order.
The bank's leadership, led by the chairman, meets with shareholders to deliberate the report and financial statements for 2022 as contained in a 248-page document. A look at the key indicators suggests that the group emerged stronger in the year under review compared to the previous year, but a slight drop in profit after tax.
The world is changing. Any bank that does not invest in technology will be left behind. And I have seen what you have done, and this is showing us that you are very proactive, and our business is not going to suffer.
Be resolved that a final dividend of 2 naira 90 kobo per share, making a gross dividend of 91,049,831,982 billion, hereby declared payable on pro rata basis to the shareholders.
Dividend declared, 2 naira 90 kobo per share to be distributed to shareholders, bringing the total dividend for the year to 3 naira 20 kobo.
We thank them because it's better than nothing. There's a bottom line for them to declare dividend.
Zenith Bank Group Managing Director and Chief Executive Officer comments on the 2022 results, the outlook for 2023, and how the bank is preparing for economic uncertainties.
There are so many whistles and bells going off globally. So we are taking a look at them and asking what does it mean, and identifying our key risk events and making sure that we align our risk appetite statement to deal with those risks. So where we see an elevation, we look at the risk appetite statement and moderate it.
Within 32 years of its existence, Zenith Bank says it has demonstrated resilience irrespective of the business cycle and witnessed growth in virtually all areas. It was recently named the Bank of the Year by The Banker, Financial Times of London.
And to our first conversation now, it's earnings season, and major companies are rolling out their first quarter earnings for 2023. Today, we're focusing on BUA Foods as a leading food manufacturing company. Let's take a look at the numbers now. We see assets rose 5% year-on-year, 649 billion naira, and revenue that rose 60% year-on-year. Gross profit at 56.5 billion, that's up 100% year-on-year. We see profit before tax 85% up year-on-year. Well, joining me now is Engineer Ayodele Abioye, Managing Director of BUA Foods PLC, joining me via Zoom. Great to have you on the show.
Thank you, Daddy. Good morning. Thanks for having me on your show this morning.
So looking at the numbers now, I see the top line quite impressive there. Revenue is up 60% year-on-year. What were the key drivers of the top line and bottom line figures?
So, yeah, you're right. Just looking at the numbers, all of these have come largely from the volume growth of 18% on our aggregated product offering. Yes, like you did roll out on the highlights, top line grew 60.2% to 44.3 billion. And, of course, that lands us into the profit after tax, also delivering 77% growth to 40.5 billion as it were year on year. Well, that's not to mention the earning per share at 77% growth at 2.25 naira. In terms of levers, the business have largely focused on its expansion drives, which is one of the strategic core initiatives that I would call a big bet for us as a business. And this market expansion is largely focused on local market as well as our sub-regional markets. And we've seen the sub-regional market actually contributing to up to 30% of our total business as it were. And aside from that, also is the product mix, pricing adjustment that we need to take in order to balance and the shocks of input costs, as it were. And of course, we continue to keep very strong focus on other overhead costs and also improving our internal efficiencies, more or less to sustain the land, to also continue to sustain our position in terms of our ambition to deliver food security in Africa. By and large, we are happy with the results that we are equally proudly sustaining our position as the most profitable food business in our sector, as it were. Thank you.
And looking at the numbers now, see cost of sales, a big jump there from 28 billion to 87 billion naira. Operating expenses also grew about threefold. That's quite a big move up there. What drove that too?
Okay, yeah. So as you know, generally the operating environment globally and locally has been very disruptive. This has become an unending situations, and of course we continue to see headwind manifestations on a day-to-day basis, or if you like call it on a regular basis, which businesses have to face. Of course, for us, global issues impacts a lot on input costs. However, if you bring that down to the local environment, and specifically in quarter one, we've seen disruptions highlighted with the CBN cash redesign policy, as it were, which largely impacted secondary distributions, as it were. We also see, of course, the rising inflation trends, especially fruits, which at this point in time, I think is climax at 24.4%, as it were. Disruptions that we have also seen in terms of the general elections, which also primarily affects our uptime, also gave a very big impact in terms of our supply chain activities. So all of these costs are actually pulled together in that space. However, for us as a business, we continue to leverage our unique strategic model as an aggregate business in food across all our business divisions. Obviously, we did spend more in our selling and distribution as part of the mitigation steps to basically catch up, and also for us to be able to deliver, to balance the greater opportunity of a higher top line and a higher bottom line, as it were. And so that's why it's a balancing game, more or less, for us, putting more investment to mitigate some of the headwinds, and that's why you see those costs there. But by and large, we're very proud about the numbers that have come up, and also to highlight generally that the supply part of the business also, which also had direct impact, we had to, of course, continue to also leverage our delivery hedges, as it were.
And you did mention inflation, and central bankers globally have been trying to tame inflation since 2022. We've seen global central bankers raise rates. Right here in Nigeria, the CBN has raised rates. MPR is really high right now. How are you managing rising costs of finance?
Okay, so as it was, so finance cost is one of the headwinds that actually all businesses need to grapple with. If you look at it also, AFEX, as it were, it's a function of availability and time value of when it is there, and of course what is the rate. For us, we keep balancing on the hedging possibility. Also, sourcing from all dispositions from the central bank, as well as also from the parallel market or the earning window, as it were. So whatever we can pull together, and also to take appropriate timing decisions in order for us to hedge in terms of cost, and also to manage our output costs, as it were. So of course, inflations are there. We keep balancing our business to deliver, to keep our focus on getting good numbers out there as well. At the same time, trying to make our customers and consumers happy, as it were. We do as much as we can also to contain the costs, so that we do not pass 100% all costs to our consumers and, of course, to our customers, as it were. And that's one very key, very critical, unique differentiating factor for our business as it stands today.
Yeah, definitely inflation is a very big headwind right now, and passing on those prices will also stoke inflation going forward. But talk to me about the businesses you run at this time. I know you have a sugar industry, rice milling facility, and edible oil plants. Break down the performance of your business segment.
Okay, thanks, Lady. So BUA Foods, as put together, it's an integrated 5 business divisions. Of course, like you did call out, it's comprised of sugar, flour, pasta, rice, and edible oil, as it were. Those 5 businesses, at this point in time, in Q1, we have 4 of them that are actively generating revenue into the stream. We are very excited with the performance of the 4 segments, and of course, the latest on the block, which is the rice mill, which also I will speak about. In terms of specific segment performance, sugar, as it were, grew 25%. Of course, this is majorly driven also by our export market contributions, which, like I did mention earlier, has also given us a 30% overall contribution to total business. Our flour business also grew 58% to 31.3 billion. Largely driven by our commitment, our delivery to commitment in terms of expanding our production platform. We added additional 800 metric tons plants in our Port factory. That's already commercialized in Q1, and the effect of that is what we are seeing in terms of growth. We obviously will see more of that as the year rolls down. The pasta segment also grew 22% to 19.4 billion, as it were. And of course, like I did mention, we're getting the rice business also commercialized towards the end of Q1, and that also contributed marginally in terms of revenue. So we're seeing all across the segment an aggregate volume growth of double digits, which stands at 18%, as it were. Over and above that, as we commercialize largely the rice in the end of the quarter, as I did mention, with marginal revenue contributions, We believe that going forward, this will be scaled up. We remain very happy and excited, and also proudly to say that we stand as the only listed rice producing company on the Nigerian exchange, and of course in our sector as it were.
I'm sure shareholders must be quite excited at this time with your listing price. But bring us in on your expansion plans going forward.
Okay, so going forward, as we settle down commercialization on the flour, we will be completing our pasture division expansions, which is actually coming with 100% capacity increase. As it were, again, one of our key strategies is expanding capacity ahead of demand, which is basically to fulfill demand, as it were, because we believe that demands continue to be there as populations continue to rise. We completed the upgrade of a rice division, as I did mention, and then also we will continue to focus on upscaling our rice business, which have just recently kicked off in Kano in our rice mill. Our intention is to also add additional mills across the across the country in several locations to further increase capacity, and also to support the government effort in terms of promoting what we producing, what we consume locally, and also be able to close the gap between consumption and production, as it were, in the rice supply system. We believe also that we will continue to expand our product offering, particularly with consumer preference changing, and of course customer demand also changing, and also with the price and inflationary issues that come. So our innovation in product offerings will continue. We will also continue to expand our market into the region through our export strategy, and largely also in terms of sourcing alternative source of local raw material, which is championed in our sugar division with the backward integration program. We will be continue to drive an accelerated effort in that space, which is under the supervision of the Nigerian Sugar Development Council, primarily to ensure that our backward integration program is on track. And as it were, it's a 20,000 hectares of land, which has potential to crush 10,000 tons of grain per day. It's one of the biggest green sites. Starts on a green slate, and we will look forward to capacity and capability to harness over 200,000 metric tons of raw sugar from the sugar plantation, as well as the refinery factories that we are setting up there, which has got over $200 million at this point in time.
And definitely, it's not an easy time to be import dependent. I know, you guys have some big export plans, especially for that sugar. I remember you did purchase some vessels, to help you with your exports of sugar. How's that looking?
Looking quite well. Very exciting to say. I will tell you, here to date, it's been an exciting inquiries moment that we have received across the sub-region as well as the continent. In fact, even beyond the continent, we receive queries on a daily basis in terms of supply. And of course, we are addressing them face by face. We believe we are well positioned to also take the benefit of the AFCTA, the African Free Trade Continental Trade Zone area, as it were, when that also becomes very entrenched and kicked off largely on a large scale. However, that also we need some support within we hope that governments of African governments will also put together to support private businesses like us in terms of addressing or mitigating challenges with logistics, in terms of both shore and offshore interactions to be able to get products into other markets within the sub-region. So the export market, yes, you're right. The enrollment of MV Budu has actually helped our performance in the last year and is still obviously supporting us in that space. Again, like I did say, we're quite excited about inquiries into our product, not only sugar, also other products, and we look forward to continuing to expand in this space, and also, of course, to support the economy and our national development, as it were.
And definitely, the first quarter was a very tough quarter right here in Nigeria, but you were able to navigate all of that. What are you seeing for the remaining quarters of 2023?
Okay, so for the main quarter, if I will respond to that, and I like to take a quote quickly from recent forecast by the IMF on the Nigerian economy, as it were, forecasting growth at 3.2%, and also describing our economy as one of the most stable. This is despite rising inflation, and also in the midst of CBN efforts to also tighten monetary policies to tackle inflation. So for us, short-term to mid-term, we want to remain focused on our targets to increasingly deliver double-digit growth across our core financial and operational performance. And of course, in doing this, we will remain very steadfast in terms of our strategy, which is basically to drive revenue. And we will do this by, of course, focusing on our commercialization efforts in terms of our expansion of our key production sites in rice, flour, pasta, as I did mention, the additional capacities that we have onboarded. Of course, we continue to expand our market frontiers as well, both locally and, of course, more importantly, regionally and into the African market. As it were, this for us is very core and it's very key and it's very important for us.
All right. I guess we'll have to.
We need with consumer needs, secondary consumptions.
All right. Looks like we're having some connection issues there. I don't know if you can hear me, engineer, but.
Turn it up, and I just wanted to hand over to you.
Okay, thank you so much. Even though we missed some of the juicy details you were giving us there, the connection there quite.
Do you hear me?
Yeah, I can hear you now. I can hear you. All right, I guess we'll have to leave it there now, Engineer Ayodele BUA, Managing Director, BUA Foods PLC. Thank you so much for coming on the show. I wish you the very best going forward. All right, so I will take a break now. When we come back, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning. And for the AFEX market update now, in the last trading week, there's mixed performance across key indicators. Turnover reduced by 70.76% from 9.68 billion naira to 2.83 billion naira. We also saw a decline of 78.10% in the volume of contracts traded. There was an increase in the number of deals traded by 11.61%, closing at 125. The AFEX Commodity Index rose by 0.40%, closing the week at 482.07 index points. The AFEX Export Index performed positively, rising to 230.42 points from 225.82 points. For the volume of contracts traded, there was an increase with volume across cocoa, maize, paddy rice, soybean, and cashew nut. Let's look at the price movements now. We see across export commodities, sesame, ginger, and wheat maintained at 1,247 naira, while 923 naira and 380 naira respectively, while cocoa, that rose by 10.67% and closed at 2,083 naira 73 kobo. Paddy rice, that rose 2.64%, closed at 338 naira 85 kobo, while soybean rose by 0.87% and closed at 341 naira 72 kobo. So cashew nut, that rose by 0.14% to close at 611 naira 47 kobo, while sorghum, on the other hand, witnessed a decline by 3.52% and closed at 274 naira. Cross grain commodities, maize, rose by 4.57% and closed at 237 naira 96 kobo per kilogram. So that's how the markets, the price action we saw on the AFEX summary, that's how we looked for the week ended. Now, taking the conversation forward, over the years, there's been an increase in responses and solutions to Africa's food security challenges. These significant strides within the African agriculture industry have set the foundation for achieving food security for a booming population. However, in fully realizing this goal, the convergence of agriculture, finance, and technology is crucial in providing innovative and scalable solutions across the value chain. Through the annual Code Cash Crop Conference, AFEX is championing this much-needed multi-industry collaboration. Well, joining me now is Mr. Yusuf Oguntola, Chief Technology Officer at AFEX, joining me from our Abuja studios. Great to have you on the show.
Thanks for having me, Ladi.
Yeah,
nice
so break it down for us. What is the Code Cash Crop, and how specifically would the African agriculture industry benefit from the Code Cash Crop?
So time flies, right? It's already 1 year when I was here to discuss Code Cash Crop 3.0. So what we've been doing so far in the industry is to say that for us to rejuvenate this ecosystem and ensure that we are able to unlock more values to smallholder farmers in a bid to build a continent that is self-sufficient in food production, we need three key sectors to come together and have interesting conversations on how can we support this industry better to ensure that we are able to provide more values to everyone within that value chain. So Code Cash Crop is an avenue for experts in the technological industry, experts in the finance industry, as well as experts in the agricultural industry, each of these three domains to then come together, have conversations on how can we innovate better and ensure that we are providing more values than we are currently doing within the agricultural ecosystem.
And there are a myriad of state and non-state players within the agriculture and ag-tech space. Why was it important for AFEX to lead this conversation?
All right, so interesting question, right? Financial Times says we are the fastest growing company in Africa as of yesterday, right? According to the report just released by Financial Times. However, you would know that, thank you, congratulations are in order for every expert in AFEX and Africa as a whole, right? Because this is a win for not just AFEX, it's a win for Nigeria, it's a win for Africa. And we are proud to be the one putting the continent at the forefront there. We've been in this landscape for a decade now. We believe that somebody definitely needs to lead that conversation. And being a giant that we are in this space, the stride that we have been able to put in place in the last 10 years obviously put us in the right position to be able to put the right participants in the different industries together to now start that conversation and catalyze the opportunity for them to discuss better and then also take that conversation forward, right? Because it cannot just stop at just discussing. When we come to the round table, have conversations and then draw conclusions from those conversations, somebody then needs to implement whatever we have discussed and whatever we have analyzed, right? So that's where AFEX then come into play. So we are interested in ensuring that these conversations happen. We're also interested in seeing that whatever the outcome of those conversations are, they're actually implemented and it becomes value for the whole Africa.
What is the focus of this year's Code Cash Crop, and why is the theme important in today's agricultural landscape?
What we've called Code Cash Crop 4.0 is scaling market-led solutions. And the reason we've come out with that idea is we need indigenous solutions to be developed. Now, we have indigenous problems, and it implies that we cannot just import solutions from other parts of the world and attempt to implement those within our own continent. So what we intend is to have people from within these key sectors to come together and provide indigenous solutions to the problems that we are having within the sector, right? So scaling market-led solutions implies people would come together, they would look at the problems that we are having within the sectors and how they particularly affect Africa as a continent and not just the other continents of the world, right? So they provide solutions to all of this, and we are going to incentivize the building and implementation of the solutions. We intend for whoever wins, the winners of this year's Code Cash Crop to go home with a $10,000 cash prize, apart from the fact that we're also going to be doing a 1 month, depending on how many people then come out and how many submissions we have. We're going to be doing month-on-month trainings and support to ensure that they are able to be guided enough to implement what their solutions is about.
You did mention the prize, the $10,000, quite mouth-watering there, but tell me about past winners. How are they doing at this time?
Yeah, Majinoma won the first prize, and then we have a second runner and a third runner-up, right? The three of them, fantastically, they were all young graduates from institutions in Nigeria. Apart from winning those cash prizes, they have now all gone ahead to build the solutions and expand on the intentions that they had back then. We also provided some sort of guidance and, providing guidance and tutoring them as to how do you then do this better, how do you implement, how do you scale, how do you put it out to the world, how do you ensure that farmers that we intend this for are able to benefit, and the consumers as a whole are also able to pick from all of these benefits and derive interesting things within the value chain.
Well, I guess it's all about solutions. But you mentioned that this is a 4th edition of the event. How would this differ from the previous iterations?
So Code Cash Crop started in 2012, right? And last year, which was Code Cash Crop 3.0, we introduced the Ag Hackathon Challenge for experts to then come together and have a boot camp and build whatever you say your solution is, and let's see what it's going to be like. And we're going to be judging and grading based on whatever they come out of in the boot camp, right? So this year, again, we are going to be doing the same thing, but then in a larger scale. Last year, it was just limited to experts within Nigeria. We are taking it a step further this year, and we are going into the East Africa. We are expanding this into Kenya, and we are going to be having experts from Nairobi and other parts of Kenya being able to also submit their intended solutions. We are also going to be having a boot camp in Kenya. The same time, we are going to be having it in Nigeria, and we are going to be judging across all of the continent before we then have the grand finale on the 5th of August in Nigeria.
All right, wish you the very best in this one. Thank you so much for sharing your perspective with us there, Yusuf Oguntola, Chief Technology Officer at AFEX. Thank you.
Thank you for having me.
All right, we'll take a moment now. Welcome back. Well, one of Nigeria's oldest banks, Wema Bank, is celebrating its 78th anniversary and 6th anniversary of Alert, a platform that allows one open an account and manage your money without ever going to a branch. The week-long event is an array of exhilarating activities and competitions for clients, employees, and the general public. Take a listen.
It's the anniversary week of Wema Bank, a financial institution renowned for its innovative banking solutions. The bank is also celebrating the 6th anniversary of Alert, an award-winning app which gives customers access to exclusive group and personal savings, a free debit card, lifestyle benefits, and up to 4% annual interest. The Chief Executive Officer and Managing Director of Wema Bank speaks on the highlight of the anniversary.
This is our 8th decade. As we push to our 9th decade, obviously there will be a much bigger celebration when we hit 80. But we will celebrate 78, we will celebrate 79, we'll celebrate 80. And hopefully in another 80 years, we pray and hope that Wema is alive. The biggest milestone so far is that we've brought the bank back to the very heights of banking in Nigeria. 6 years ago, we launched a groundbreaking product called Alert. And over the past 6 years, there's testament both locally and internationally that is a world-class product. So as far as we are concerned, it's brought us back to the forefront of banking in Nigeria.
Employees and clients create fun memories at the release of a cascade of Alert balloons into the sky. The bank says the balloon hunt for its customers is challenging them to locate balloons spelling out Wema and Alert in different locations and post photos on social media using hashtags such as #alerts@6, #Wema@78 and #SpotAlertInTheAir to stand a chance to win fantastic prizes. Another highlight of the celebration is the Sounds of Alert competition, which seeks to uncover talented musicians in the entertainment industry and provide them with a platform to showcase their creativity. The festivities will also encompass the launch of the upgraded Alerts for Business, the digital bank application for a fully revamped Alerts for Business platform to revolutionize the way business owners manage their business transactions.
And yesterday, the NGX resumed physical trading on the floor of the Nigerian Stock Exchange. We can recall the trading floor was closed for buying and selling of stocks in 2020 in the wake of the COVID-19 pandemic. Our very own Anita was live at the closing gong ceremony yesterday and spoke to some stockbrokers. Take a listen.
What brokers stand to benefit from physical trading. Most of them will wish that, in fact, it had happened before now. Well, of course, we can't do away with technology. Technology made us to be able to trade virtually, still interact with one another. But this particular one, has a unique benefit to all dealers. You have a rare opportunity of exchanging ideas, with your colleagues on the trading floor. You have also a rare opportunity of, consulting, asking information, getting, right information at the right time. Not the information you get when events have taken place. You get information at the right time and you act on those information. That you cannot get from virtual trading, but you can always get that from the floor. Of course, we also have a tea room where brokers converge and also exchange ideas. Also conduct their deals because it gives you opportunity to do so many things. So this physical trading is an opportunity to bring everybody back to the fold, bring us back to the platform that we recognize that has always been the one promoting capital market as a whole.
When a company's information gets to our trading engine, of course, you will see people will digest it there immediately, the implication, and you as a young broker, you will learn from your senior colleague and take informed decisions. So you can see it's a win-win for everybody. However, those of our colleagues who are outside Lagos, yes, I'll still employ them. They can still be doing the virtual trading. The exchange, Nigerian Stock Exchange, as it used to be before, we even had a remote trading. Just that it was not that prominent. A lot of us still trade in the office, Then from time to time, you come to the floor to fraternize, and share ideas, share opinions and all that. You come to the floor for physical trading.
The issue of the return to the market offers, the natural habitat for brokers to continue to do what they know doing best and better, congregating and sharing in the kind of camaraderie that they normally would have. So whether or not there will be more public offerings or not, it's a matter of time.
And congrats to the NGX for returning to physical trading. But let's look at the market where physical trading is not necessary. Talking about the crypto market, we see Bitcoin there formed a base and started a recovery wave above the 28,000 resistance zone. Bitcoin climbed above the 28,200 resistance zone to move into a short-term bullish zone. And we look at the index there, the fear greed index, showing market sentiment back to 64. Greed still playing in the market. The way traders use the fear greed index, when the market is fearful, that's when you look at adding, to your portfolio. But when the market is greedy, that's when you should start looking at scaling out. So that's how you use this fear greed index, going forward. 64 points is what we're seeing today. Greed. Let's look at the top cryptocurrencies we track. We see Bitcoin at $28,487. It's up 1.68%. Did start that downward trend over the weekend. Everyone looking at the U.S. Fed today, going to set the rates for May. So I've seen Bitcoin already trying to react to all of that. And most of the cryptocurrencies we track here. Ethereum, $1,861, up 1.70%, almost 2% this morning. We see BNB, though, going the opposite direction, 0.42% down. And Cardano unchanged this morning at 8 a.m., 38 cents was trading at. But we see XRP, that's trying to make a big move up this morning also, following the trend we're seeing in the market, up 1.53% at 45 cents. That's what we're seeing for XRP this morning. So at the end of the day, traders are taking position at this time. What happens when the U.S. Fed meets later on today? Is it going to be 25 basis points, even though that's what's baked in at this point? So that might be priced in to the action we see, but there's still a lot of volatility in the crypto market. Bitcoin did cross that 30K level, but it's had some selling pressure from that level. Who knows? We might start another uptrend with this, with some investors there trying to buy some of those cheap coins. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide. Great to have you.
Yeah, thanks for having me, Ladi. Good morning.
Yeah, so I do remember in 2022, we predicted that 2023 is going to be the year of regulation. And we're already seeing that playing out for the crypto industry. We've seen the Nigerian Securities and Exchange Commission, they're considering allowing licensed digital exchanges to list tokens backed by certain assets. Tell us more about this.
Yeah, the Security Exchange Commission has been trying innovatively to really boost participation in our markets. You could recall that foreign market participation is at record low, probably because of our FX market conditions. And, the FX earnings coming from crude oil has deeply moderated. So regulators are looking ways to really boost in our capital mechanism. And one of the rightful ways was really liberalizing digital assets. Nigeria happens to be the biggest crypto market in Africa. A lot of young Nigerians really trade on these assets. So it was a no-brainer for regulators to see how they can bring those capabilities. So what the Securities Exchange Commission is talking about is that assets that are backed by debt, equity, or real estate definitely have underlying value, can be listed with authorized, and it will go through a demo period, I think for the first 10 months before there'll be an incubation period before it really gets out there. So yes, it really shows that the Security Exchange Commission definitely is having a liberal view towards digital assets. But major concerns still remain. These don't include the likes of the popular ones, Bitcoin, Ethereum, and those public blockchains we see. And that's pretty much because the Security Exchange Commission and the CBN have not been able to work around accepting these types of tokens, crypto assets, sorry. So those are tokens that they are really talking about. But the interesting thing is just that, we're seeing a current towards that approach.
And obviously, there's still some issues with the Central Bank of Nigeria. We know most central bankers globally are not fond of cryptocurrency because of its decentralized nature. But I know the SEC is still waiting on the CBN for clarification. What are you seeing in that interplay?
Yeah, I think the future for the crypto markets is still bright. If you look at the CBN's roadmap in terms of payment, and stable coins were included, and that tells you that we're seeing future integration across that line. And you also recall that a lot of powerful banks, particularly those we're seeing in Western markets, including the ones in Saudi Arabia, are using XRP Ledger. That's a blockchain capability. So it tells you that the evolution of payment definitely will support these things. And I think the AFEX Bank also has included that in their roadmap. But Nigeria happens to be quite conservative in taking all those things. But what is triggering the hopes of many stakeholders in the industry is the president-elect mentioned the fact of boosting blockchain capabilities. His body language definitely will be all eyes to see on how he would make that happen. Because right now, banks cannot trade crypto, cannot have exposure in crypto assets or crypto exchanges. So that's pretty much really why the liquidity in that space has dampened. But if you look at it year to year, that has not really brought capital infusion to blockchain startups in Nigeria. We're seeing a number of blockchain startups also raising equity and venture capital. So it tells you that the future seems to be bright. But the body language of the president-elect in the first 6 months will really ascertain if that's really going to happen.
Yeah, we'll definitely be looking out for that. And talking about body language of governments now, we're seeing Italy, they're looking at a 26% tax on crypto gains, and Kenya also introducing 1.5% tax to crypto companies. It looks like the crypto industry is going to be taxed heavier than every other industry.
Yeah, because what they've seen is that a lot of young people, particularly Gen Z and millennials, have interestingly increased their exposure in these assets. And based on the decentralized nature, it's pretty much very difficult for them to capture transactions. So they're trying to do it 3 ways: trying to limit the growth in that industry, also trying as much as possible to monetize. And we've seen, but it's really a very complicated process, because you really need people of expertise to be able to track those transactions. And some of these assets are kept in self-custody where that does not have any ID, or it's very difficult. So the law, the MECA law, and the US roadmap on crypto regulation also definitely would play in on how these things will happen. But definitely, yes, we are seeing a surge in regulation towards that area and concerns by global central banks on crypto assets.
Yeah, it'll be very interesting to see what crypto tax in Nigeria will look like, but we'll definitely be looking forward to that. But today is the D-Day. The U.S. Fed is meeting for another rate-setting meeting. What's the best way to play this market today? Everyone's already, the consensus is 25 basis points.
Yeah, but the consensus is 25 basis points, but the appeal by political heavyweights like Senator Warren, and some conservatives in the Democratic Party and Republic just tells you that the market contagion is really going on the high. You call that the US Fed's interest rate hike has really affected banks, and we've seen 2 banks already going on that. But based on numbers, you see that the US Fed is not an emotional entity, and they are really set out the mandate of reducing inflation as low as possible. So it's really very unadvisable to be over leverage in this kind of environment, particularly in an area where you see liquidity crunch. The US Fed last month reduced their balance sheet by $95 billion, and they kept on accelerating. So apart from increasing interest rates, they are also mopping out liquidity, and that does not really spell for the longer play for crypto assets. So investors that really want to hold those positions should keep in things they can afford to lose and have a long-term play in this asset.
And looking at the US again, we know they have that debt limit issue, trying to get that debt limit raised, and they're going to hit that in June. How is all of that playing into markets, from equities, global equities market, even into crypto?
Yeah, exactly. Just like you rightly said, we've seen the fact that a lot of investors have been moving stash inflows of their currencies to safe markets. And that's why we've seen African sovereign bonds from Kenya to Egypt and now Nigeria having depressed positions. But having said that, it has also weighed heavily on riskier assets, particularly altcoins, Bitcoin seems to be immune. It has been able to stay in that support between the 27,800 to 29 for a couple of days. And that's pretty much because a lot of investors are using that asset to hedge against banks. But having said that, I think it's fair to say that we are in an era where liquidity crunch will definitely affect risky assets in the long run. And that's why we've seen gold breaking above the $2,000 mark. A lot of investors are hedging and keeping away from risky assets. With T-bills, especially US T-bills, offering a yield of 5%. It makes little sense to invest in risky assets right now. And that's why risky assets right now seems to be very uninteresting.
Yeah, risk assets, very uninteresting. But we also know that cash also has this uninteresting appeal too. So what do you think is going to happen, going forward? That limit, if it's not actually increased, even though everyone believes that they're going to increase that, debt limit going forward, don't you think it's going to be bullish for Bitcoin?
Definitely, it will, but it will very unlikely be. I think common sense will prevail. I think Republicans will give Joe Biden the 1.5 trillion increase, at least bare minimum. But if that doesn't happen, definitely assets like Bitcoin will take advantage because definitely we're going to see mispriced in dollar assets and a moderation in their market, and definitely we'll see outflow. And I don't think the Americans will want to play into the Chinese hands with the way the dollarization is working right now. So I think the political angle will be fixed. But in the longer run, I think the crypto market still has high survivability because with regulation coming into play and the fact that Coinbase has also announced the launching of an international exchange tells you the future still remains strong for digital assets.
I will definitely be watching if Bitcoin still has legs to run in May, if it's not a situation of a sell in May and go away. Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you for having me.
All right, let's head on to the markets back again. Let's see how the top gainers are looking this morning. Let's see, we see STX topping that counter, double-digit gainer there, 13.16%. For the past few days, not been seeing double-digit gains on the top 100 cryptocurrencies we track on CoinMarketCap. Then we see Optimism, that's starting an upward movement there, 2.18%, trading at $2.15. Did fall as low as $2.10 after getting to a high of about $2.60. And we see CRO, that's trading at 7 cents, up 1.87%. Let's look at the top losers now on this morning in the crypto market. We see VeChain, one of the top 100s there, 2 cents, down 3.50%. It's not really moved much. We've not seen a narrative that's ready to push VeChain up just yet. IMX, 91 cents, down 2.29%. CMakerDAO also showing up on the top losers counter after showing up on the gainers counter yesterday. It's down 2.03%. And we see NEO, 2.01% down, and Flare Token, 2 cents, 1.86%. So still a lot of volatility in the market. Now, all eyes on the US Fed for their rates meeting today. Who knows? Maybe the market might actually have some kind of pump after that. Anyway, that's how the markets are looking today. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channel Television. You can watch all our productions on the videos. Thank you so much for watching. I'm Ladi Williams. Bye-bye.